Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Let's get to Walmart shares. As we talked about at the top, surging, pushing the retailer's market value over $500 billion for the first time after it posted stronger than expected first quarter earnings and boosted its annual sales and profit forecast. So we wanted to know more. It's the e-commerce business, it's the store business, it's the average ticket spend. There's a lot going on, Tim, when we talk about Walmart.
Also the outlook. We welcome Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst Jen Bartashus at a Bloomberg Intelligence headquarters in Princeton. Okay, Jen, break it down for us. Investors certainly loved it, but what did we learn about the business today, and what can it tell us about the broader economy?
So we learned a couple of things about the business today. The first is that some of the investments Walmart has been making are really starting to play out. They're able to consistently grow operating income ahead of revenue, which is a great story for them to be able to tell. They're gaining market share, and ultimately their e-commerce business is really showing signs of taking off. So all of these things together really are working for the company. We're also seeing that consumers are still value focused, and Walmart is offering that value to people, not just from a price perspective, but also from things like convenience. And that's what's helping to draw in some of those higher income households that they've been talking about.
Well, when it comes to what they expect in terms of adjusted earnings, coming at the high end or slightly above its original guidance of $223 to $237 per share, revenue growth of 3 to 4% for the full year. Was it analysts just too low on it, or was that's kind of what the business was, and Walmart's just surprising and doing better than everybody really thought? And they thought maybe.
Well, Walmart, came into the year with their initial guidance a little bit conservative because it was really unsure where the consumer was and where they would be. So, today they nudged up that guidance a little bit. They're at the high end of their previously stated range. I wouldn't be surprised if at second quarter earnings they actually adjust their guidance for the full year. But it's really, they're staying a little bit conservative just because there are a lot of factors at play that affect consumers still.
Listen, they're massive, right? And they certainly play into a certain sect, I would say. I think it's fair to say, of the consumer, although we've known, coming off the pandemic and just other times that we feel like their customer base has widened out. Has it? What do we know really about the demographics of who is the Walmart shopper?
Well, historically, you would have considered about 50% of their customer base to be in that lower income household type of demographic. But today, what they talked about was that when they divide their demographics between those who earn under $50,000, those $50,000 to $100,000, and households over $100,000 a year, it's about a third of their business each. So that's a meaningful shift in the way that their consumer base. And it really does bode well for them going forward that they should be able to retain some of those higher income consumers who tend to spend more and they tend to buy more discretionary items as well.
Hey, Jen, those higher income consumers, those folks who earn more than $100,000 a year, are they flocking to Walmart right now because they're looking for value, or is Walmart doing a good job of offering items that those wealthier households tend to go out and shop for? Which one is it, if you were to say it's one of these things?
Well, I would say initially when we had really high food inflation, it was the price draw. But Walmart's been investing in upgrading their stores, improving the customer experience. And once you got those customers in the door, they saw that there were other changes that were happening with regards to merchandising that is appealing to them. So it's a story of two parts. The first part was price, and now it's also about service and convenience. That leads into that omni-channel e-commerce growth of over 21% from a global basis. People like the idea of being able to order, have it shipped to their house, or pick it up at curbside, and that's really driving a lot of the interest in the company.
Yeah, talk a little bit about that. How is Walmart Plus doing, especially when compared to Amazon Prime? How do you look at these two programs together?
Well, it's a good question. When I look at Walmart Plus, it's really about locking in loyalty. The majority of the use is for things that are shipped to home and a lot of grocery orders. You can order unlimited amounts, and have it delivered or shipped. When it comes to Amazon, they did launch a new subscription program for grocery at $9.99 a month on top of your annual membership Prime fee. But so clearly, Amazon is seeing some of the success that Walmart has had with that subscription model. and see that there is a convenience play to be had with consumers who are interested in that sort of service.
Are the folks who are using buy online, pick up in store, is it true that they're going in and actually buying more once they get to the store? Because that's a way that companies hope, that brick and mortar companies hope to get folks inside the store to buy more.
It does happen more often than you would think, because people are on their way to the store and they think, oh, I forgot to add this to my order. I'm just going to hop in and grab it. And when they're in the store, then that adds like three things by the time they get to the checkout. So it is something that actually really does happen. It's not with every order, but it's more often than most people would think.
All right, sounds really rosy, and they also saw traffic and unit increases that helped out sales growth, grocery business fueling the growth over at Walmart. Yet they did cut workers, right? They are very cognizant of higher costs generally, I guess, across their world as well as kind of everybody's world. So any commentary or color around that?
Yeah, sure. Walmart is very much an everyday low cost provider as well as an everyday low price provider. And part of that is really being disciplined with regards to costs. Now, we saw announcements in the last month about things like closing down the health clinics. We saw the announcements about corporate job cuts. Those are, in fact, likely related to a certain degree. But Walmart is, one of the things they do is they're not afraid to try something, but if it doesn't pan out, they pull back and they reassess. And so some of those cuts that we saw are really a reflection of that attitude towards their business.
Hey, if there's one business that you think that we should be kind of keeping on our radar, that maybe Walmart's going to be moving into aggressively, that could move the needle top and bottom line, just 20 seconds left, what would it be? I thought I heard you say fintech on TV earlier, but I don't know if that's it.
If we look to what Walmart's doing in their international segment with fintech, there's a lot to be excited about. And so whatever they can adapt and bring more into the US and what they're trying to do with fintech here could be a catalyst. All
right, interesting stuff as always. Hey, Jen, thank you so much. Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst, our own Jen Bartashus, with the rundown on everything to do with Walmart today.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
You may have done it, or someone in your family. We're talking about DNA testing with a company like 23andMe or Ancestry.com. Interesting to find out more about, of course, where your family's ancestry composition is, right? We all talk about it. We find out, hey, did you know? My family's done it. All right, well, the DNA testing industry was aiming for a bit more, to a world where the medical community added genetic testing to its standard operating procedures.
I don't know, Carol, maybe you find out stuff you don't necessarily want to know about your family or relatives. That's part of the story.
Hey, I've got a half sister.
It's all part of the story.
No, I don't. At least I don't know yet.
After years and millions of spit kits, the doctors still don't care when it comes to this type of testing, at least for companies that are mass market. Mass market genetic screenings remain well apart from the medical mainstream. And for one of the players in the industry, 23andMe, it's actually never made a profit. Carol, it's the cover story of the new issue of Bloomberg Businessweek. It's on newsstands, it's online on the Bloomberg. And here with us is Bloomberg News healthcare reporter Kristen V. Brown joining us in the studio.
Great story. So glad you could be here. DNA tests for everyone, lots of genetic data, and bam, research gets a boost and moves faster, and we create a roadmap for living to age 100. That's in your story. That was the plan.
That was the plan, yes.
And yet
it did not quite go according to plan, which I will say is often the case in science, right? We have a big finding, we're like, wow, we just have to do this like one or two things and then we'll solve all disease, which is almost literally what they thought would happen with the human genome. But then as we started untangling it, we realized, oh, this is just like way more complicated than we realized. And that turned out to be trouble for companies like 23andMe that wanted you to be able to just spit in a tube and learn, all of the diseases you might be at risk for. But it turns out there's not just one gene for heart disease. There are so many genes we don't even know what they all are. It's
right?
So complicated, and they all interact, and we don't know how they interact. So they're trying to, for some of these things, do what's called a polygenic risk score and say, based on all of these genes, you might have a risk. But it winds up being more like you're slightly more elevated risk, not an actual roadmap for what do you do to stay healthy and live to 100.
And in a small portion of the folks who do the test, it does come back with some sort of result that says, okay, you do have the characteristics of this sort of genetic, I don't even know the proper terminology.
Variant.
Genetic variant, thank you. But then treatment for that, as you note in your story, can be incredibly expensive.
Right. So monogenic diseases, there's a lot of them. That's genes, a single gene that causes a disease. There's a lot of them, but they're usually very, very rare. And because they're rare and the therapies are also very complicated, fancy high-tech things, they're expensive. Small population, small market. So we have gotten a few of these therapies so far, but definitely not the, therapies that we expected for very common diseases like Alzheimer's, like cancer. So we've gotten therapies that have a small market, and so therefore they're really, really pricey.
We talk about people spitting in a tube. I'm not going to ask for a show of hands in the control room. We're here, but you did.
I did it. Yeah,
I did not do it.
I have spit in so many tubes in the course of my journalism career, but I did for this particular story too.
And it wasn't the typical 23andMe $20 thing, right?
This is a very high-tech
test.
Yeah. So 23andMe's latest offering is it's doing sequencing, not genotyping, which is a fancier. They're literally decoding every little bit of all of the protein coding regions of your genome, which are the ones that we think cause disease. And in doing that, they really hope to get this really holistic, nuanced picture of the genome. For me, in the sequencing, they actually didn't find anything. And then in the genotyping, which is a sort of more low budget option, they found that I might be at risk for celiac disease, but I can tell you I had avocado toast this morning for breakfast.
Doing just
and
fine.
It went fine.
Okay.
It went fine. So, so for me at least, this is a almost $1,000 test, and I learned that I might have a disease that I don't have. So I don't know.
Well, did you do anything about that? Like, I'm curious. Did it cause you to say, well, maybe I'll have a doctor look into this?
Well, usually if you have celiac disease, you have a violent reaction when you eat gluten. So I felt pretty confident. I also said I might one day develop glaucoma. I have a slightly increased risk, but you can't actually do anything about that. So it's I don't know what to do with that knowledge. So I felt like I should have spent that $1,000 on some shoes instead. Maybe, I don't know.
Preaching to the choir. Well, the medical community, right, has been, to some extent, they haven't embraced this idea.
No.
So, I mean, is that part of the problem? Is it just a case that it's complicated and maybe it is the right idea? Or, like, in your reporting, like, what's the kind of feedback on this?
So I started looking into, I wrote this story because I started wondering, for the decade I've covered this topic, people have told me, this is the year genetics is going to catch on. This is the year. This is finally the year. No, this year. And it just never happened. And so I started asking some of my longtime sources, is this happening? What's the status here, guys? And I was surprised to hear from many people who had been boosters for the genome, who were now saying, we're not sure it's ever going to happen.
That's amazing.
And with science, you never know. Maybe we'll turn a corner, we'll find something that will suddenly unlock everything. But based on what we know now, it does feel like it's just so complicated that for the average healthy person, there won't be value really in getting a genetic screen. Now, if you have a history of cancer in your family, if you want to become a parent and you want to make sure you don't have any genetic conditions lurking in your genome you could pass on, that stuff, all worth it. But if you're just an average healthy person trying to live their best life, it just really seems like there's not going to be value in these tests.
It raises the question about what the future is for 23andMe, and that's a big part of your cover story for Bloomberg Businessweek, the idea that the stock has been under pressure over the last few years, down more than 94% over that period of time. Richard Branson lost over $100 million on it going public. What is the future for 23andMe as a business? Yeah,
so I mean, they're in a real tough spot. They just got an extension to try and get their stock back up over $1. They have until, I believe, November to do that.
The concern is that they'll be delisted.
Yeah, the concern is that they will be delisted. And I think in a move to prevent that from happening, CEO Ann Wojcicki has filed an intent to take the company private herself, to buy it back, basically. So that could be one thing we see, but I think that it's a really rocky road ahead for them.
Well, it's interesting, and I don't know, is this a company that might benefit being private? in terms of having the time, the luxury, maybe the money, to kind of figure this out?
Based on what the stock did when she filed that 8K, I would say that the market thinks it would benefit from going private. It's a hard company because it's part consumer, part drug development, and the investors in those two different kinds of companies, Anne has said this herself, they kind of have different expectations. So it's a weird blend of things, and that has created an additional challenge on top of, having a consumer product that a lot of consumers maybe don't want anymore. So
what about the data and the data breaches that we've heard about, the security of this information? I mean, years ago, I'm going to say my mom was right. She was like, why would I want to give a company this type of information once it's out there? And I was actually I was saying, no, this type of stuff stays safe. Fast forward a few years, there's a big data breach.
Yeah, I mean, Anne has said that she thinks that privacy concerns has been one of the reasons kit sales have slowed. She said that in the past. And, that could definitely be what's going on. One analyst joked to me that 23andMe would probably do better to just give the kit away for free in exchange for getting people's data, because that is the most valuable asset they have.
How much we've talked about generative AI, and you think about the more data that comes into the pool, whether or not that can help kind of be a turning point, like more information.
I mean, they have 15 million genomes. That is one of the biggest genetic databases on par with Ancestry and the country of China. So that's really valuable. And so if they can keep growing that asset, that could be big.
And to be clear, there was a data breach of people's personal information.
Yes, there was a data breach that had personal, and it did contain some genetic information.
All right, Elizabeth, our producer, YouTube producer, and me, we're both with your mom about this in terms of the information. Any questions that you still have? You've reported this story out and you're thinking about it. What questions are still kind of top of mind for you? Yeah,
I mean, I think for me, having covered this field for a decade, it was sort of an existential crisis to actually do this story and be, questioning whether this thing that I have covered for a decade really doesn't matter. So I think that I just want to see how this science unfolds and what value we will wind up getting from the genome. Because I don't think that it's going to wind up having been for naught that we sequenced the human genome 20 years ago. But I think what we're going to get isn't what we expected. So that's still to be written.
It's fascinating. I remember kind of early on in my career, they'd map something and we'd do a story. And then when they finally completed it, it was just like, wow, now we have all the information, what we can do with it. But here we are.
Here we are.
More to come. That means more stories from you, more cover stories. Bloomberg News healthcare reporter Kristen V. Brown on this week's Bloomberg Businessweek cover story, which you can get online on the Bloomberg and catch it also on the newsstands.
So you haven't done one of the tests yet?
I haven't. One of my brothers had.
Yeah, my sister did it.
But
and I think, okay, if she did it, then
it's out there.
Yeah, we know.
It's definitely out there.
People can connect the dots.
Kristen. Good to know.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Sony Music Group, one of the world's biggest record labels, they got Lil Nas X, Celine Dion are artists. They came out today warning AI companies and music streaming platforms not to use the company's content without explicit permission. They don't want any unauthorized use in the training, development, or commercialization of AI systems. That's according to a letter obtained by Bloomberg News. Also of note today, Carol.
That's ownership in a big way.
Exactly.
Okay.
So don't use our songs to train your models.
Got the memo.
You got it?
Yep.
Okay. Also of note today in the world of AI, Ampere Computing, the chip startup backed by Oracle, teaming up with Qualcomm to make equipment for AI computing. It's an area that's currently dominated by NVIDIA.
There's just a couple of the AI-related headlines today. I got to say, every morning that we read in, there's just a lot of stuff going on. Partnerships, strategic alliances, or just news from an AI-related company. Fair to say, no shortage. For more on AI, we're joined by Durga Malladi. He's head of AI at Qualcomm, and he joins us from San Diego. Durga, so great to have you here with Tim and me here on Bloomberg Businessweek. Tell us kind of about your world and what's top of mind when it comes to AI. People say we're early on in this game. If it was a baseball game, it's maybe, the first inning, perhaps. But tell us what's top of mind when it comes to you guys at Qualcomm.
First of all, thanks for having me here. There's a lot of things that are going on in the space of AI as it runs on devices that you and I usually use, whether it's handsets or phones, whether it is tablets or PCs and so on. So let me spend a little bit of time in terms of explaining what's really going on out there. So in the last 2 years or so, ever since generative AI started making waves in terms of its capabilities, pretty spectacular capabilities in terms of the kinds of use cases that it can unleash. As Qualcomm, we've been focused on trying to bring that technology into devices that you and I can use. And usually one of the questions that comes in is why? Why do you want to run this on a device? Why can't you just run it on the cloud? I mean, we do use the cloud for so many different things. And what's wrong actually? So it's kind of important to understand what are the benefits that you actually have when you run these like amazing generative AI models directly on devices. The very first one is related to privacy and security.
Okay.
A lot of the times when you actually go through generative AI use cases, you might be wondering, maybe it's just a chatbot. Maybe I ask a question, I get a response. But it doesn't have to be just a chatbot. It could be, these days we use a lot more of both voice-based interaction with devices, in addition to using like camera and something else to bring in additional context to the question that you're asking. For example, you could be holding up your phone and pointing in a certain direction and saying, what am I looking at? The question itself is meaningless unless you kind of put in the rest of the context.
Right, the context is important there.
Your image and whatnot.
You said
but then that's a ton of information that's actually going in out there. And that information, you want to actually process it locally. You might not be fully comfortable actually dealing with all of this in the cloud.
So Durga, you say, I totally get it why this makes sense to have on device, whether that's a smartphone or a PC. We'll talk about PCs in just a minute. You said you've been working on this at Qualcomm. Why hasn't it happened yet? Why is it still something that you're working on and not something that you've been able to bring to market to the extent that you want to?
So actually, if you take a look at it, at least on the smartphone segment, if you take a look at some of the premium tier smartphones, whether it's a Samsung Galaxy S24 or a Pixel device or something that we are seeing in China with Xiaomi and Honor and some of the other devices, all these devices now are capable of, based upon keeping aside the Pixel part, but everything else based upon Snapdragon platforms from Qualcomm, running very large language models directly on the device, up to 7 billion parameters. And these devices are now capable of a lot more things than you're used to. I do admit that the use cases are still gradually waking up to what are the capabilities in the smartphone, because that is something that takes a little bit of time. But if you've kind of taken a look at some of the live translate features or AI-based voice assistants, the capability to run very large models directly on device starts today. It's already exists today in smartphones, and the use cases are gradually coming up, and we're doing our part on the use cases as well as I kind of go through the rest of the discussion.
Durga, you guys have you've been talking about phones specifically, but I'm assuming that you're thinking also PCs as well. And I'm just curious if that's the case. And, you guys have been trying for years to get into the PC market. Why, though, hasn't it happened so far? And why maybe is it different this time around, if that's also on your radar and your mission?
So absolutely right. And in fact, when we think of devices, we usually think in terms of smartphones, PCs, XR devices, consumer and industrial IoT. So it's the whole gamut of devices that we are actually talking about. And of course, automotive sector is in a category by itself. But let's talk about PCs over here. There is a massive disruption that's coming to this specific segment in the context of AI PCs. Now, the definition of AI PC is it's up to different people. But from our perspective, it is a PC in which not only do you have like the equivalent of, everyone has heard about co-pilots, in which you're constantly using something else that is running, with which you interact with quite frequently and use it for productivity, whether it's in creation of documents, editing documents, or taking one kind of a document and translating into another, and so on and so forth. This is what we would call as like a on-demand AI.
Okay.
It's a little bit like a chatbot. You ask a question, you get an answer.
Okay.
There is more. Well, there is more to it.
Well, okay, so if there's more to this, and why do we need an AI PC to do this? Why can't we just do this on the powerful machines that we already have? Why do they need to be AI specific?
So one thing that, I mean, these productivity tools make it significantly more simpler to actually not just interact with your device, but actually make it a lot of the things that you end up doing tend to be far more richer in terms of the capabilities in itself. Let me give an example of that, by the way. Imagine that you're actually on a chat session with your colleague, and you're actually talking about a specific meeting that you just had. And the next thing you know, something pops up saying, okay, do you want me to share the meeting notes with the person? And you just click yes, and that immediately goes in. Just think through exactly all the things that happened in that whole process. First of all, this is now the equivalent of what we have been calling as pervasive AI. AI which is constantly running inside your PC. It's actually kind of trying to encapsulate you as the end user and the PC into like one single state, and you're constantly predicting. You're thinking on its, the PC is actually kind of almost thinking and anticipating the next move from the user, and then being very proactively helpful in that whole process.
So we've only got a couple of minutes though. So is that why we need an AI PC specifically?
Combination of the productivity tools plus this, along with a few other things associated with, as a code generator or as a content creator, it is something that's constantly running in the background. Now, keep in mind that we use our PCs regardless of whether we are connected somewhere to the cloud or not. I mean, the simplest example is you might be on like a long flight and you want to actually get some work done during the flight, but all you have is just you and the laptop at that point in time, regardless of what the connectivity is. And you still want to have the same kind of productivity. So it does actually really start growing on you. Quite a few of us inside Qualcomm have been dogfooding exactly that experience with our own internal reference designs on these AI PCs. And trust me, it does change the user experience.
But what does an AI PC do for the consumer? What do they get out of this, a regular consumer?
A regular consumer, I mean, if you categorize between, we talked about productivity tools, let's talk about content creation. Content creation is also kind of a productivity in its own way. So that part is actually quite clear. But if you start thinking about all the other things, even when it comes to the social interactions and emails and documents and so on, a regular user at the end of the day goes through a mix and match of these different kinds of use cases. And we believe that it's actually a pretty big differentiator between the before and after. Now, is it like a big bang moment that happens? That is something that remains to be seen. But we are on the cusp of all these launches that are coming up over the next few weeks. And let's see how that plays out.
Do you want me to be replaced, Carol, by an AI PC? Is that what you're hinting at?
I mean, come on. No.
Not going to happen.
No.
Hey,
an avatar,
not going to happen
perhaps?
this year. An avatar. Avatar to prepare for the show, and then the real life Carol and Tim get to do the
Avatars
show.
can do all the work. And then we just step in. Yeah, I'm down with that. Durga, thank you so much. Really appreciate getting some time with you. Durga Malladi, he's head of AI over at Qualcomm, joining us from San Diego.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
You drive me crazy.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
It is that time. Can you believe it, Carol? We're about 18 minutes from the close on
We're near our
this
lows, too.
Thursday. Near our lows.
On the S&P and the NASDAQ 100.
Stocks can't go up every day, Carol.
Okay.
They can't, okay?
Thank you, Tim.
You're welcome. I don't know. I know that you just started doing this.
That's all they could
You just
do.
started doing this.
I don't remember the drop during the pandemic,
Yeah.
the great financial crisis. I'm just kidding.
So am I.
We're a little punchy today.
We have reason to be punchy, though.
We do.
Yeah, you got a 4-day week. I have a 3-day week.
Yeah.
So, yeah.
I don't know about you.
This is your
all.
Friday.
Yeah, I'm happy.
Hey, I want to get Ryan Kelley's thoughts. He's Chief Investment Officer and Portfolio Manager at Hennessy Funds. Ryan manages the Hennessy Cornerstone Mid-Cap 30 Fund. It's concentrated a portfolio with 30 small and mid-cap stocks. And Carol, its performance so far this year, it's at 23%. It puts it in the 98th percentile of its peers, and it's in the 98th or 99th percentile on a 1, 3, and 5 year time frame too. So pretty good performance.
Ryan, you got to feel good. You just pack it up, go home, and say, folks, we're done for the year. There's my year to date. No. So good to have you here with us once again. I don't know. I hate to ask like macro for you, because I feel like what we really care about is like what you're thinking and buying, because you guys kind of drill down and have a limited portfolio. Having said that, is there anything in the macro that you care about that you think investors should keep on your radar, that you keep on your radar?
Well, I mean, thanks for having me on, first of all,
Sure.
Carol and Tim. I was looking back, and I think the first time we spoke was almost 10 years ago.
Wow.
Carol, we were talking about gas utilities. So prior to the great financial crisis, as you mentioned.
Wow. Which is a reminder, right? Which is a reminder. We have market cycles.
That's right. But, I would say that when we look at this fund and thinking about more macro, we like the mid-cap space. And this is a mid-cap portfolio, small to mid-cap. We really look at companies that are between 1 and 10 billion in market cap. And we like that space for a few different reasons. Number one, these are companies that are usually big enough that they already have a good track record. They've already seen some growth. They're big enough to matter. But yet they're still small enough that they can continue to grow into different, use their whatever they do or whatever technology they have. They can move it into different industries. They can continue to grow and take market share from the bigger guys. And that kind of puts them in a unique space. And then we also like them because they can also be an acquisition target for some of the larger companies as well, and they actually could make a difference. So for this reason, we like mid-caps. They also are more attractively valued, and that's certainly helped this fund over many years. These are companies that are not quite, you're not going to find as many of the, large cap techs that are in the AI stocks that are trading at really high valuations. But rather, some of these companies are, especially the ones we look at, are more attractively valued, maybe less growth, maybe even simpler and less exciting to look at. But
let's talk about some of these companies because they're no judgment, but like they're not the shiny objects of AI, like you mentioned.
Be kind.
In fact, well, look, I mean, performance speaks for itself, I think.
Yeah, that's true.
No question. But I mean, some people might be surprised to find that your number one position is in the Gap. It's 6.3% of your portfolio. This is a company that has seriously struggled. This is not the Gap of the 90s these days.
Absolutely.
What is it about Gap that has you bullish?
Sure. Well, it really just fits all the criteria. We look for companies that are out of favor. We look for companies that they end up being out of favor and they show up because they're trading at lower valuations. One of our biggest metrics that we look at is a price to sales of less than 1.5 times. That's actually pretty strict. There's only about a third of the companies in the entire market that are trading at 1.5 times sales or less. And then what this usually gives us is either sectors or companies that are good companies overall, but just don't see that same kind of valuation that others will see. Then what we do is we make sure we look at only the companies that have seen earnings growth on a year-over-year basis and that have 3 and 6 month positive stock performance. If you have all that, we look at your 12-month performance and we add you into the portfolio. So what happens is we see this time and time again. We saw this with energy 4 years ago when nobody liked energy. We saw it at one point with home builders. And we saw it this year, as you mentioned, with Gap and Abercrombie and Fitch and even Guess. These are all apparel retail. We bought them all prior to the holiday season. And we buy them at a 3% position when we rebalance in October. And as you said, Gap is now at 6.5%. So it's doubled since we bought it. And that's just the way that we do it. We want to buy these companies as they have some momentum and just hold on to them for a period of time, about a year each time before we rebalance again the next year.
Really interesting. $8.1 billion market cap. The Gap company is down to about 14% of the float is shorted, up about 4.25% this year. But interesting. And I think we all are kind of waiting for some like next chapter, certainly for this name, and whether, I don't know, we'll see where it goes. You like another retailer, Abercrombie Fitch is in there also. I don't know. Take us to, is there anyone in particular that's one of your more recent ads?
Sure. Well, actually, all the stocks we're talking about, except for 3, were added in October. The way that we do this is we only rebalance once per year. So we like to buy them and hold them and see what happens. And we let the winners ride. And if some stocks aren't doing well for a period of time, we continue to own them as well. And when you buy all stocks at an equal weight position at 3%, 3.3%, because there's 30 of them, we'll get some that really outperform others. So we've talked about the retail, the apparel retail, Gap and Abercrombie. We also have a couple, believe it or not, of stocks that have done very well.
Can I say Sprouts? Oh, you would go in the industrial space. Sprouts is up 60% this year. It's now 7. Wow. Yeah.
That's been a great holding for us, Sprouts. 2 companies, Modine Manufacturing and Comfort Systems. They do HVAC systems. They do heating and cooling, and they're up very nicely since we purchased them last October. So these are the types of companies that the fund buys and that we put in the fund. And sometimes they're just not quite as exciting or interesting as other stocks out there, but over time, as you can see, it's done pretty well.
You know, it's fascinating. Modine, by the way, up about 74% this year. Coming back from Milken, like it just, private equity and so on and so forth. You talk to them, even private credit. Like so many people play in that mid cap space that we focus so much on the big caps, and then we get into kind of small caps or venture and so on and so forth. But there's so much happening in the mid cap space that is so much. I feel like when we talk about really, backbone of the economy, it's so many of these companies. Ryan, always fun, 10 years and counting. Really great to check in with you, and congratulations, because you're fun, as we said, just beating
pretty much everyone out there.
Yeah, so well done, well done. Ryan Kelley, Chief Investment Officer, Portfolio Manager at Hennessy Funds, joining us there from Chapel Hill, North Carolina. I love talking names with him. And I love
Gap, Abercrombie, Sprouts.
Modine Manufacturing.
Very cool.
Really cool stuff. This is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.